Today's segment for War on Your Dollar is being brought to you by AMAC, the Association of Mature American Citizens. You can find them at amac.us. Now going back to China being a currency manipulator, obviously it's a huge subject we have to look at, because if China's undervaluing their currency, that means that Chinese goods are relatively cheaper than U.S. goods. So we buy more Chinese goods, support their companies, and so forth. One, China's pegged their currency to the U.S. dollar back in 2008. Should it still be pegged? And is China's currency undervalued, so to speak?
The fact is they've pegged their currency to the dollar, just like many, many other currencies around the world. We don't fly those insults of being manipulated to these other currencies that are pegged to the dollar. It's basically that the Chinese work hard.
When you look at China from a cultural perspective compared to ours, one of the things that they don't take kindly to is pressure and pushing. And in the context of their culture alone, you know, we get into saving face, and I know, and not to go too deep in the mores, if you will, of the culture, but I think what's been interesting is Geithner's been moving around and getting the G20 to circle around and say, hey, well, you've got emerging markets like Brazil and India that are saying, look, you really are devalued and you need to bring this thing up into alignment with the rest of the world.
But isn't U.S. debt part of the problem? The fact that right now China, once they sell us American goods, instead of changing the price that they get for those goods back into yuan or renminbi, they're leaving it in U.S. dollars and then taking those dollars and buying treasuries. And so because China's buying up all our debt, they don't have to turn their currency or turn their dollars that they're making back into yuan, which is keeping the yuan low and inflating the dollar.
Well, of course, that's the one reason there, when they do let the thing flow more freely or in a controlled peg upwards, they will start to sell U.S. treasuries to buy renminbi. And that, of course, is going to place real strains on the U.S. Treasury, because where does it sell its debt? Because there are going to be a lot of other currencies or countries that are anxious to get cash, and are they going to be selling U.S. Treasuries to start pumping money into their own economy?
You make a really good point, and not to bring in a whole other issue with Greece and Italy and Spain and Ireland and some of the problems in the EU, but John makes a very good point. Who else is going to buy the debt? You know, the other countries are looking for, you know, who's going to buy their debt?
Well, does that bring up a double-edged sword for the Obama administration? Here you have Obama, you have Bernanke, you know, calling for increased pressure on China to, you know, to value up their currency and that it's undervalued. But if the Chinese stop buying U.S. Treasury and start changing more of their dollars into yuan and renminbi, who's going to buy our U.S. debt, and does that give them less ability to spend?
Well, we're on a high. We're on drugs, basically. We think we can go on living this fantastic lifestyle, working less hard and for much more money than the other people. And this reality is gradually going to dawn and come through the door. And we're going to find it very cold.